Welcome to the Daily Update, where I'll go over the action in the market for Thursday, February 23rd, and then we'll see how things look for Friday, February 24th. Not really surprising, we saw a bit of a bounce. The day started off positive, and then we turned negative, only to come back positive. That can be longer-term positive if we see some carry through in Friday's session. But looking at just the daily charts, we really just worked off some of this short-term oversold condition. Not all of it, and we're still vulnerable to going right back into that, but at least in Thursday's session, some of that got taken care of. So let's go back and talk about what happened. We did have a gap higher open, which ended up going above R1 at 4,013. That didn't last very long before prices dropped down below the daily pivot at 39.95. We dropped down below the unchanged level, and then we went all the way down to S1 at 39.73. As the day went on, prices rebounded, got back above the unchanged level, and the daily pivot actually got a little bit above R1, and then we ended up closing right at R1. We were up 0.53% on still below average volume. Our technicals are still negative overall, but as I said, we're working off some of this oversold condition, especially in the short term, because the markets are still fixated on inflation and interest rates. And that hasn't changed and probably won't change for the foreseeable future. That's producing a lot of earnings per share and valuation concerns. We do have a lot of geopolitical concerns in the background that could quickly come to the surface and influence the market. Earnings are still being released even though we're coming closer to the end of earnings season, and the debt ceiling just has not been dealt with to this point. Here's the intraday chart showing how we gapped up above R1. That's where we set the high for the day, just a few minutes after the open. Then we came down below R1, down below the daily pivot. That's the dark blue line. This dashed line is the unchanged level, fell all the way down to S1. We set a bit of a base there before rebounding back up. We got above R1 only to come back down and close right at R1. Some comments that we can make: the S&P did fall below 4,000 and the 50-period moving average that was calculated at 39.80 before rebounding. So that means support is holding for right now. We get down to that level or a little bit below and buyers seem to start coming in. On a short-term basis, our stochastics and our Stoch RSI are still extreme negative. Intermediate term, we have the PMO study and the CCI 14 and 20 are still extreme negative. The dollar was up slightly and interest rates were down. Especially interest rates going down gave some support to stocks going higher. We still have all of our yield curves that remain inverted, suggesting that there will be a recession in the future. Sentiment is still positive. We're at 63. We were unchanged from 63 yesterday. I'll go over the economic reports on the next slide. Our trend is negative and weakening, and now we're below 20. So we are now in a trendless environment. I've switched our bias over to mixed, where it had been more negative to mixed. Now it's more positive to mixed. Our momentum is still also mixed. The market's still trying to figure out what it wants to do here. We are negative overall when you look at our charts. We just are seeing price action be more in the midpoint. We did have the weekly jobless claims come out. They came in at 192,000, where this was less than the 200,000 that was expected. We also received the second estimate for fourth quarter GDP. It was revised down to 2.7% growth, where they expected it to be at 2.9%, and last time it was at 2.9%. The deflator that they also released was revised up, and this is a little bit of a concern. It came in at 3.9%, much higher than the 3.5%, where last time it came in at 3.5%. The personal consumption expenditures index, this was revised up. That means prices are going higher. It came in at 3.7% from 3.2%. We also had the latest release of the American Association of Individual Investors showing that they're more positive on the market right now. When we're above zero, that's more of a positive bias, and we're not giving any kind of an extreme reading, either positive or negative. The Ulcer Index continues to come back up to this moving average, showing that fear is increasing slightly as we were going down. The VIX declined on an up day, which is not surprising, on the line chart as well as the bar chart. And the volatility of the VIX is also starting to decrease as we went up in Thursday's session. Looking at the condition of our trend, we're dropping below 20 with the black line here. That's the actual ADX. We're below the moving average, so it's a weakening trend. But since we're below 20, that is a non-trend. The red line, even though it did decline, is still on top with the green line decreasing. So we're in a negative bias in a non-trending environment. The daily chart shows how we came down to this upward sloping trend line, which I just added. That so far has acted as support. That goes from the October low and also some lows that we set back in December just to see if we can maintain some support at this level. And so far that has held. We're above this pivot level and we're still above the 50-period moving average, even though we came down below that in Thursday's session. On the bottom, we see where volume continues to be below average. The stochastics in the short term, extreme negative, even though they're turning back up. Intermediate short term, still extreme, and we're still negative with the long short term stochastic. Stoch RSI continues to be extreme negative, even though it bounced up slightly. The CCI 14 and the CCI 20 continue to be extreme negative. Our PMO study showing how the percent of PMOs that are rising is still extreme negative, even though it turned up. The buy signals, that's starting to get extreme negative. We're just barely dropping below that red line, and we continue to decline with the PMOs that are above zero. The Swinland Trading Oscillator is still negative based on price and volume. Even with the up day, these indicators continue to decline. The BPI, after coming off an extreme positive reading, continues to drop. So even though it's still above 50, the downward movement of this indicator suggests that's more negative. We're coming back down above this breakout level with the NYSE BPI. The Chaikin money flow continues to decline. Even though it's positive, it's coming off of a pretty positive reading and starting to decline. The balance of power continues to be below the dashed line, so that's negative. The TTM squeeze has continued to drop below zero, so that is negative, and the bars are turning red. The go-no-go system continues to be neutral with a lighter shade of blue. The CMB composite is trying to bounce up short-term fib level. We're just barely above this 4007 level, so that could still be taken as support is holding, but we actually closed down below that in Wednesday's session. And our longer-term fib chart going from the all-time high down to the October low shows how we're coming back up and trying to maintain levels at this 38.2% retracement, which is right at about the 4,000-ish level. Longer term, we're also below this 4,020 level, which had been providing support. We dropped down below that. If we go back up, will this provide resistance? Here's the 50-period moving average, how we came down to the exponential and dropped even a little bit below that before going back up and closing slightly above both 50-period moving averages. We came down to the 100 exponential moving average before bouncing back up. So this is just showing that as of right now, support continues to hold. Our moving average tree also shows we're going back down into the other moving averages. The Elder Impulse system for the S&P continues to be negative. The McClellan Oscillator, after getting extreme negative, is starting to bounce back up. But our summation index based on price and volume continued to decline. New highs, new lows, not seeing a breakout one way or the other. So we're going flat with the 5-period and the 10-period. The advanced decline line still maintaining levels above this moving average based on price and volume, and it did tick up slightly. The advanced decline ratio is still below this zero line, even though it turned back up. So it's negative, but saw a little bit of a bounce. Accumulation distribution. This is still positive. We're above an advancing moving average. Our volume measurement just shows how volume continues to drop off and remain below average. The diamonds are still negative, and the Qs remain negative. Looking at the small caps, after coming up to resistance and then falling back and maintaining support, well, we broke through that support. However, we did regain this support level in Thursday's session. On top, we have an RSI which is below 50, but it did show a bit of a bounce. On the bottom, we have a declining MACD. The Pring bottom fisher still continues to generate a buy signal, but we're just not seeing an awful lot of follow through with price. The FANG stocks are now giving us a golden cross. Can that continue, or will this end up being a fake out? Bond yields had really been going up, but they declined in Thursday's session. Looking at just a couple of updated charts for our possible positive scenarios, after getting extreme positive, we're finally starting to drop back down with the 10-day average of the S&P 500 highs minus the lows. And our staples to S&P 500 ratio is still looking viable. Although we are starting to come back up with the ratio, we are working off of this spike, which a lot of times gives support to the S&P. We just need to see follow through that lasts more than just a day or two. What's our outlook for Friday? The technicals are negative and still slightly short-term overbought. We have personal income and spending coming out, as well as PCE prices and the core PCE prices. Those are big because the Fed really likes to look at these reports to determine what's happening with inflation. We also are going to be getting new home sales as well as the final consumer sentiment reading. And we have all the geopolitical events to be in the background at any given time. Earnings as they're released. We are going to have some Fed speak. There'll be a speech on Friday, but then anything else, maybe an interview or some kind of a comment that a member makes. But it's really when Chairperson Powell speaks, that's when the market pays most attention. And then we'll see if anything develops at some point over the debt ceiling. Looking at the Stock Traders Almanac statistics for Friday the 24th, we're neutral to slightly positive with the Dow and the S&P, but we have a much more positive backdrop with the NASDAQ. It's been up 71.4% of the time. And then the other areas where we're still providing a positive backdrop to the market, but as can often be witnessed, it doesn't mean we're going to go straight up from here. There can be a real bumpy road along the way. And as I mentioned a minute ago, Fed Governor Philip Jefferson will be giving a speech at 10:15 a.m. on Friday. Our scenarios can't really go with the down one because we're not trending right now. Even though the technicals are negative, they are still slightly short-term overbought. Until we see a strengthening trend, it's going to be really difficult to pick up on the downtrend. We can't go with the uptrend because our technicals are negative. And other than getting a short-term bounce, at this point, wouldn't necessarily change that scenario. Now, if we do see some real positive action and the market goes back up, then we'll have to fall back and regroup and say, okay, are things turning more positive? But we don't know that until Friday's session is complete. So we have to go with the sideways trend for right now because the ADX is weakening and it's below 20. The red line is barely on top, even though it is negative. Our conclusion, the S&P is negative, but still slightly short-term overbought. Intermediate term negative in a few indicators. The CCI indicators are overbought. And as long as we stay above the 200-day simple moving average, we remain positive in the longer term and still work off of that recent golden cross. Thank you. I hope you found this helpful. I hope you have a really good day on Friday, and I will talk to you over the weekend where I'll prepare the daily video first, and then I will also prepare the weekly video, the intermarket analysis video, the deep dive video, and the supplemental video.